everyone, welcome back to the channel. I'm Shakelia LeBlanc, aka the Loan Slayer and your mortgage advisor. Today we're diving into something that can save you a ton of money. How and when to get rid of mortgage insurance on your home loan. Mortgage insurance is one of those things that just comes along with the territory when you buy a home with less than 20% down. But the good news is it doesn't have to stay forever. So in today's video, I'm breaking down how mortgage insurance works, how to get rid of it, and explaining the difference between mortgage insurance on an FHA loan versus a conventional loan. Let's get started. So first things first, let's talk about what mortgage insurance actually is. Mortgage insurance is a type of insurance that protects the lender in case you default on your loan. It is completely different from homeowners insurance. Mortgage insurance protects the lender, but you, as the borrower, have to pay for it. Now, if you purchase your home with a conventional loan and didn't put at least 20% down, you have PMI or private mortgage insurance. For a conventional loan, the amount that you will pay in PMI is based on several different factors, including your credit, DTI, and loan amount. On the other hand, if you have an FHA loan, it looks a little bit different because you're not paying PMI, you're paying MIP. You see, they kind of just switched the letters around. MIP stands for Mortgage Insurance Premium, and it's a requirement for all FHA loans. The amount that you pay is based on a set percentage of the loan amount and not your credit score or DTI like on a conventional loan. If you put 10% or more down or select a 15-year term instead of a 30-year term, you'll get a little break. Another thing to note about MIP on an FHA loan is that you also have a one-time upfront premium that you pay when you close on the loan. It's usually 1.75% of the loan amount, and most people roll this into their loan. Okay, now that you know the difference between PMI on the conventional loan and MIP on an FHA loan, let's get to the good stuff. How do you get rid of mortgage insurance? We'll start with the conventional loan. Here's what you need to know. Number one, there's automatic PMI removal. By law, your lender is required to automatically remove PMI when your loan balance reaches 78% of the original home value. This means when you've paid off 22% of your home's value, your lender has to cancel the PMI, no questions asked. You don't need to do anything except for wait for this to happen automatically. This usually takes about 10 to 12 years if you're paying just your regular monthly payment. Number two, you can request PMI removal at 80%. This is a little inside tip. You don't actually have to wait till you get to the 78%. You can request that your lender remove the PMI once your balance reaches the 80% of your original home value. So if you've been paying a little bit extra or your home's value has gone up, you might be able to get rid of PMI sooner by requesting it yourself. Another way to get rid of PMI is through home appreciation. If the value of your home has gone up since you bought it, you might already have 20% equity without even realizing it. I wanted to highlight this because of how much homes have appreciated in 2021 and 2022. Like I said, it usually takes about 10 to 12 years to reach enough equity to have that PMI removed. But if you purchased in 2020 or before, you probably already have enough equity to get rid of PMI. So here's what you need to do. If you believe you're in this situation, call your loan servicer first. This is the lender or the servicer that you're making the payments to, and they will guide you through what steps to take. Usually you need to have owned the home for 2 years and have made on-time payments. And if you meet those requirements, it should be a straightforward process. They may require a full appraisal or offer another solution like a broker price opinion or desk valuation that does not require a full physical inspection. Now let's switch gears for a second and talk about FHA loans because things get a little trickier here. First, if you put down less than 10% when you bought your home with an FHA loan, you're going to have mortgage insurance for the lifetime of the loan. Forever. Unfortunately, it doesn't automatically go away like PMI on a conventional loan. But if you put down 10% or more, you can get rid of MIP after 11 years of payments. So I know you're thinking, well, how do I get rid of MIP faster if I put down less than 10%? The best way is to refinance into a conventional loan. If your credit is good and you've built up enough equity in your home, at least 20%, you can refinance into a conventional loan and get rid of mortgage insurance entirely. Now, one thing to note about refinancing to get rid of the mortgage insurance is closing costs. As I explained in one of my previous videos, refinancing comes with fees, usually around 2.5% of the loan amount. Could be a little bit more depending on your market. So make sure it's worth it based on how much you'll save. If refinancing makes sense for you, it could be a win-win situation. You get rid of the mortgage insurance and potentially lock in a lower rate at the same time. And that's it. That's how you can get rid of PMI on a conventional loan or MIP if you have an FHA loan and start saving money every single month. If you've been paying mortgage insurance and you think it's time to say goodbye to mortgage insurance, talk to your lender or reach out to me directly for more information. If you found this video helpful, be sure to give it a thumbs up and subscribe for more tips on how to make the most out of your mortgage and home buying tips. Got questions? Drop them in the comment section or reach out to me directly. Thanks for watching. See you in the next video.